So if you look at them at the wave four, I was pushing the record button. Um, if it goes like this, well, we're gonna be fine. This is way the meaning that this complex correction right there kind of ended here. Just this is pretty good. I mean, you have W here, X here, Y, which is a typical 61.8% retracement here anyways. So look at that 413.89. The low was 413.90. You can't beat that. That's just if you label the wave count right, these ratios, it's just gonna pin it almost to the penny. So which is pretty good. It's just off by like 1 bar because that's where the earning took place on the low, and then we just took a reversal bar. The swing is down. See, that's the challenge. It's a little tricky right now for Tesla, So we gotta, I'm trying to make this um, a breakout from here through the wave count. But then when you go back to our screen, well, we need to overcome the sell signal, So this is where, I mean, we're just labeling the same thing. I can just do it. It's the same thing what we're looking there. So one here, two here, three here, and this is the fourth, So this is what we're doing here. So on the other screen is less more, looks more fancy with those times and those ratios and all that kind of stuff. But here doesn't give you that, So Elliott is always going to be more detailed when if you kind of like trying to pick a little precise entries on a pullback, Elliott will definitely help you. Yeah, this screen here is not gonna give you that, So like either you're talking about those shorter pullbacks and stuff, that all comes in on the Elliott world. Um, but we'll go back to this. So you don't get these kind of lows right there. You see how the price comes here and then makes its way up like here. You're not gonna see those on those signal screen. I tried doing it, but then it's not easy to run a wave count on a software which is not fully programmed and it has those all the conditions. You know, it's just simple generic charts. Those are just like if you need to read a candle and stuff and just play around with the other stuff, but it doesn't, you just gotta have to get yourself a proper software that's just been designed for only for Elliott wave. So then you would have much more detailed wave counts best by doing spending day and night for months and several years. Then you're gonna get to this stage, um, because some people have them and try making wave counts and they're just gonna mess it up somewhere going up, and because they didn't start it right from the bottom, but their expectations are just are much higher on the wave count that the price is going. It's all opinions, When you sit and actually count the waves right, where you see like, okay, where was the, where you have a completed 5 waves, where you had a counter trend move, how much does it retrace, and then you could run projections to the upside. So that takes more time, and but obviously is if I've done Elliott for a very long time. I don't have to explain anything to anyone how a wave count works and how to label it. Um, So we'll see. If this goes as a 1-2, we still need to overcome that sell signal. And that sell signal that we're looking at, well, the only way is gonna go if the price goes back up to 470. Okay, because that's the invalidation mark there. Unless if we happen to get a mean reversion signal on Tesla up there, so that's going to be our second confirmation from there. So we have time, so we'll see how it plays out in the next couple days. And so the worst case is if the price rolls over here, then we can structure something down here into that 400 range, so we can adjust it. That's just not going to be a problem. But I don't want to just throw too much risk. I'd rather stay in a diagonal, stay theta positive. If the price does kind of chop around, it's not going to hurt much, you know. And if the price does break out, well, we're gonna get paid. So we can take advantage of the sideway movement as well. So I mean, if everything goes to the plan, I mean, we're looking at November 5th, okay, to reach 485. So that's the a time relationship of 5 versus 1. So if everything goes according to the plan, okay. So this is the window for this is November, what did I say? 5th, I believe. Oops. I'm gonna go. See, I don't even have much practice anymore doing this. Name here. There you go. So go black. So that's just a time projection to see if this makes its way up. So we got time. So we'll see what happens. Okay, moving on. Yeah, just on a wave count. I don't know. I mean, can leave it like this. It's gonna be fine. If we do extend from here, we can leave the external 3 versus 1. So we could do this. So we can see where we can form a cluster to the upside. We can pin this. Yeah, kind of, it's okay. We'll see where we can, this is already went there. So yeah, we can build another zone to the upside from here. So we'll go like this. There you go. So where we at yesterday? 60, yes, 6807. So from here, if we're gonna lift this one up, so we can go. Doesn't matter. Try to get at least not a one straight line. You gotta at least get a 3-wave subdivision for a fourth wave. I'd rather do. You can't. No fourth wave last one single session. It just no, those. That's just a joke. That's just a joke. Yeah, I can do this. At least give a couple more bars for the fourth wave to kind of retrace lower if this is what it is. And then if we're gonna try to build another zone to the upside, so this way we can keep the invalidation here for that for the pivot, for the 10 bar pivot that formed yesterday. And then from there we can see if the price extends from here. Worst case is if this price starting to roll over from here, well, we're gonna watch the signal, we're gonna watch the direction and the swings and stuff, and then eventually we'll make the case for this. I mean, when is this nightmare will come, which is not gonna be easy to trade for everyone, just to let you know. But well, we'll see. Time will tell. So as long I'm not, there's absolutely no, it doesn't make any sense to look anything like this if we have a direction is to the upside. So we'll simply go like this. Just build another zone to the upside right there. So we have 6807, 6893 to 6920. That puts you at 6900. 69 goes up to 7000. So this okay. I mean, for based on a one standard deviation move, this should be plenty of time and the price to the upside from here if for this smaller degree fifth wave to breathe, going up from here. So that's it. That's all you can do here. There's nothing else. So if you believe that there is more further continuation from here, fine. I mean, if we go back here because the sell signal got failed yesterday because of the price pop to the upside. So on a monthly time frame, our next extension is at 6,900, So we have one more week to go. I mean, to end the month. So on a monthly time frame, you got 6,900 here, the next extension. So which kind of gives us the same thing here as well, the 6,900 mark. So I mean, I don't know if you expect it we're at 6,800, we're looking for another 100-point move. That'll put us at 6,900, you know? So, and if price goes up from here for November and December, then we'll look for 7,000, you know? So regardless what it is, I mean, just calculate 100 point move, which is almost close to a one standard deviation move. We're at 6,800, then we'll look for 6,900, 6,900 to 7,000. Then if we're looking for something to the downside, then we'll look for 6,700 and 6,600 and 60, So whatever the case is, but the point is this, that, let's see, the, this pivot that formed yesterday, right there, you see how it pushes up? It was sitting here. So then yesterday, as soon as this low, this high right there got taken out right there, and that's what that thing shift yesterday. I saw it when that happened. You see how these lines right there just pops right back up. So now we have this. Now we have a pivot high here and a pivot low here for the 10 bars. Okay. So when you end up breaking the downside pivot, which is right there, 65.50, that's when the price is going to come under pressure. That's you're definitely going to have a downswings and the direction will shift. So this range right there that we're looking at, it's roughly, I believe, 3.8. When I looked at him yesterday, can measure it. Take this low to this high. Yeah, 3.9, well, roughly 4%. 4% move. But if we're breaking a pivot which is a new one. Price usually makes room to the upside, you know, which can show you these examples here. You see right there, this pivot high right there, gonna move up for how many days? 2, 3, 4, 5 days. Came back down, act as a support, and then his way make his way up. So everywhere, every time when the swing turns down, and that's when the pivot is gonna form a 3 bar. So the right there, you see this low right there? It's a lower low compared to this swing low. You know, so when you have a bull trend, you want to have the price to form a higher low. You don't want to come down here. You know, that's how the trend works. You see all the swings which are to the downside are higher lows. 6.6, 2.1, 3.4, 1.9, 2.1, 0.8, 1.9, 3.2. So this one came pretty close to this 3.2 came pretty close to this 3.4. But we haven't got this 6.6. This is the biggest one. This is the key one to watch. Okay. Always remember, when you're gonna have a largest percentage drop compared to any of one of your swings on a trend up, yeah, there's gonna be a doubt that the price is gonna go like this, because it takes longer time. This is why I have a little, I don't know. I mean, anything can happen, but if I look at, let me show you an example of Meta. You see what Meta did? This is the low, right? Which is the April low. So from April low, Meta went up, came down 6.9, 4.3, 7.6, 4.9, 8.23. Hang on, let me clean this. Look at this drop. It's 12.7. Okay. It's 12.7. So this 12.7 is the largest percentage decline compared to previous ones off this low, which was 18.4. You don't see any previous swing has retraced that big, right? Because 12.7 is the highest number compared to all the other ones I just labeled. So we just did the same thing. You see all the higher lows. This 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 low is higher than this. This low is higher than this. So as long as you gotta have, this is where the pivot, this is what the red line is. But now from here, you see that was the previous pivot right there, 721, right there. Look how it formed the new one. See, it moved lower. So I know Meta earnings are coming, okay? And earnings are just, it's, it's damn, nobody knows which way the stock is gonna swing, okay? Drawing a perfect wave count and having a perfect swing chart or whatever that you do, okay, means in the end, in the end, it means nothing because you don't know which way the price is gonna go. I mean, once the earning comes out, that's what I do those, before like whichever stock is going to report earnings, that just post those levels, just look them up here. This is the breakout. This is where the price is going to come down to. Then you will have an idea like, okay, which way the price, um, made a move as soon as the those earnings came out. But the positive is that this I don't like this. Okay, I know what happens once you have the largest percentage decline. Okay, I can be wrong, but we'll see what happens if now let's take it. I'm gonna show you. Let me show you Netflix, the ones who already did. Here's Netflix, right? Now look at what happened on Netflix. Here's April low, right? Netflix made a move up 5.2, 6.5, 8.2, 10, 10.5. Look at this. 12.3 now. You see how it's making room? And it just broke this pivot right there. That's your clear resistance now. So now what basically is, it has to spend more time, okay, to the downside. And once you start breaking this, I mean, it can bounce, but this area right there is going to act as a pretty strong resistance. That's how I know all this, but I'm just showing you so you will understand how pivot and swing works. That's your zone right there. This low and this low. This was 10.4, this is 10.5, so they're pretty close. Now we're at 12.3, right? You see that line right there turned red as well. So it has to spend time. The price will depend. It's only 3 days. This is B3, right? Because it was earnings. So it gapped down and it's only 3 days. And the price making lower lows. The ranking drops to zero, right? The swing is down. The rotation that we've been watching is starting to rotate back toward the lagging quadrant, right? So the momentum is definitely just is gone, So the swing is down. So the direction is down. It means we just look down. There's absolutely no point for you to consider or look to the upside. So when it's red, from there the ranking will go back to yellow like this. So whenever the price will manage to find support, that should give a bit of a bounce, but this area right there will act as a pretty strong resistance. So it was the previous swing low along with those pivot lows. And then from there, price just has to chew some time and and then we'll watch and see how it goes. And Netflix is a stock that once it tanks, it never makes a reversal. Tesla can, Meta can. There's some stocks that you can that those stocks can reverse, you know. So now if we take this entire move to this, I mean, looking at the price action, it does looks like some sort of a correction. You see, this is like a three-way move, right? So this is a three count. This as a three. I mean, if for me, if I have to label this thing, I'll just simply go with a WXY to be honest, like this. So you have a three here, three here, three here. Oops. So you have a three, three. You see now this. So this Y right there is gonna kind of extend a little bit more. It's gonna have to take more, chew more time here to the downside. So what else you can do? Let's see where the 50 is. We're already down at 1197. Do 200, 1105. Yesterday the sucker closed at 1094. So it actually closed below the 200 the first time since the April. It tested here, but it kind of moved a little bit ever since from the April low. So it was the first close. So we gotta watch how many more closes the Netflix will put in the coming days. Um, it has a sell signal rotation. It's just not a buy, to be honest. I'm just not dying to buy Netflix. I mean, but we're just gonna watch this. This was the first close and see if it kind of bounce a little bit. But let's throw a channel here. I would go with this high instead of this because that was the first lower high right there anyways, projected from this low. So you see there's a bit more room to the downside here if the channel support gets uh, get a retest here of the lower line from this low. So it's the same thing. So we're gonna go back to Meta that we're talking about. I'm trying to explain you these pivots, how the 10 bar pivot works. Okay. So what the positives are here? The positives here are that the last 4 days, since Monday, right? So this is Monday session. You see the time right there. Monday got a retest of 50. Look at Tuesday, the doji candle right on Wednesday. Got a pop, retrace right back on Thursday. And yesterday it kind of look put it got a close above 50. I wouldn't say like this is like a super giant huge candle, but it has some little bit of a skin. I will say like meat on the body. So it did got a close here. So it's not. I mean, if the earnings are coming, it's not gonna tank hard. It's just technically waiting for earnings to come out. But if this is the first initial swing that we're talking, and if we just go by like this is a bearish wedge pattern right there against this swing. Okay, so unless so there are positives, there are negatives. The only negative I will tell you the negatives. The negatives are largest percentage swing, which lasted 11 days, okay, which is 12.7. That has formed a new pivot low, okay. The pivot high is at 790 right there, not 796, 790 right there. So we have a pivot high at 790 and we have a pivot low at 690. Okay, that's 100-point window between this zone. Okay. So the upside bet on this one will be 790. You want to have the price to make a higher high. Okay. If that's the case, then we're gonna rip to the upside. That will be all based on how they report. On the bearish note, you just have the first leg down, and if this is a three wave a counter trend move against this swing, right? And that pushes the price down like this. Okay, so that comes right back to this. So we're we're technically near close to 750. So the upside bet is I mean, I wouldn't do just draw fibs. Let's do from this low to this high. So your upside target to the upside, sorry, the confirmation for the upside is going to be 769, which is 78.6. Remember? The 78.6, the 790, which is this high right there, goes to 818. So that's the bull case. Okay. And then if the price rolls over on a surprise, well, then look for 690. 690 is, would, let's do this. Make it real easy. Is my, draw this to this. So 690 to 699. Okay. So this is going to be your bearish case. So if you think that the meta is going to sell off, that's your downside bet. Okay. For this. That would, if this break, it's going to be a confirmed 100% retest of this 200, the way Netflix is doing right now. Okay, because we already have a lower pivot right there compared to compared to this one. So this is the bear case. And if we're going to move, and if the price reverses, okay, to the upside, that would be the bull case right there. So you can just turn this one green. So this is your bet right there that I don't know which way it's gonna go, and neither do you. Okay, nobody can know or predict these earnings simply. You just cannot. This is your bull case. Okay, seven like 765 to 790, and this is your bear case. So what you're doing right now on earnings, if you're interested in playing, you just it's a coin toss. This is what it is. So if you're right to the downside, I mean, this thing can easily gonna go in the money for the retest of the 200. And if the price doesn't manage to pop to the upside, then this is the upside, upside from here. Now the positives are few of them. Okay. One is, well, you know that we've been fighting this 50, right? So which is good. That's a good sign. Second is the 200 is way down here, right? Third thing is that it has swing, direction of the swing is up. Okay. Then at the same time, we're gonna come back here to the mag 7 rotation. Rotation looks good as well. You see, it has a lot of positives, right? So we have a rotation, we have swing to the direction is to the upside. So it has momentum, it has alpha, which we can see it here. And we come back to our screen here. It has a buy signal as well. You see that? So there's a lot of positives, you know? So if we take all the positives, so it obviously makes sense to bet in the direction of the swing, which is up, right? So we have RRG, we have a buy signal here, we have that has a clear invalidation mark, which is right there that I'm talking about, 699, and to look to the upside. So there, if you put everything together, it definitely has more positives. But the only negative it has is just because of this decline, okay, which is the same example that we just looked at on Netflix. So what happened to Netflix this week? There is a chance that it can happen at the Meta as well. So it all comes down to how they report and how the stock moves. Stock can move down and it can make a reversal. We just don't know. And Meta can, this is another one stock that usually waits for a conference call, you know? So well, yesterday actually closed with the morning star. It's like a bullish candle. This one right there. It just, it's trying to, uh, stock usually don't sells off heavy when they're just only few days, um, when, in the next few days when they have earnings coming out. You're not going to see the stock tanks. Well, look at how Netflix it was. It was sitting here. Look at the last 3 days, one, two, and three. How sharp this rotation turned. I was gonna spend that time here, then eventually it's gonna form the hook back here because it didn't go there. It was going there. You see this line right there? It was heading that way. If the earnings would come out, if the price would push up higher, yeah, so that would go like this. But then in the last 3 days, oh, it's up only 22% year to date. So we have Amazon, which has a swing down. We have a Netflix has a swing down. We have a Tesla has a swing down. The rest of the swings are up. We have Nvidia up, Microsoft up, Meta up, and Google up, and Apple. I'm kind of surprised, man. Apple started the year very high. That's why the Apple is just not seeing enough year to date um, performance yet. Because you have to understand that when you starting the year almost to the top and then you're gonna drop with the market sells off and this, so you basically making a big, huge round trip. So by the time you're gonna come right back where you started the year, it takes time, as you all know, right? Goes through the several quarter stage and all the news and earnings and this and this. But then it just really doesn't show. But then it has to kind of like then you have a lot of the liquidity zone. It just when the price reaches because you can look it up on here on the chart and show you. You can go like this. So you can just go year to date. You see, look where to start the year, you know? So that's why it's not gaining much. And look how big of a round trip the stock has made to the upside. Look at the high right there. So if you just take this high to this, it hasn't really gained anything. That's the April low. And now it's trying to how close it got there, it backed off. And then it's trying to make a push here. I mean, technically, Apple just has to make room to the upside from here. It's the same thing on S&P chart. That's the year high right there. Here's the sell-off. Look how much room that the price has made from this high. This is what you call a breakout. See, like you come down here, whenever the low forms, and the price recovers back to the previous year high. And then from here, you make room to the upside. So take this, I'm going to go from here. Let's stop this thing, man. But this magnet thing on this pisses me off sometimes. 11.59. So this is 11.59 percentage to the upside. So the previous year, almost 27. And you just uh, calculate high to high, not from low to high. Obviously, it's gonna be more. Now, if you ever wondered that how much the market actually move each year, I mean this is what it is. It's so dark. Hang on. It's how much the market moves. That's the COVID low. It rallied here, hardly pulled back in 2021 because thanks to Fed, and then ripped again. That's the bear market here of October low of 2022. And then that's the 2023 low to high. So it kind of gives you a pretty good glance of a chart to kind of look at them like how much is the price actually move on a year to year basis. But then when you look at the price each year, it's making new highs, right? We're not, market has not made a low based on a previous year low and it closed lower, right? The 2022, 2021 low is here. That's what the bear. See, when you take out this low right there, you see that's when that triggers that bear market low. This is what you call the official bear market. And then from here, do you see any low lower than the previous year low? No. This low is higher than this. This low is higher than this. So all these people sit and well, I'm from 1929, and because I'm drawing my perfect line on a non-log scale chart, that we're just gonna hit that peak right there, that this is the market top that everybody just waiting for, but I figure it out. And this is where we're gonna drop 30 to 40 to 50% to the downside. Really? I mean, if we close a year lower, we have something to talk about. And when is that gonna happen? Well, this is a year low right there for this year, April low. And here we are yesterday, of 10/24 of 2025. Today is 25th. This is the entire year so far. We still got another, what, 2 weeks, 2 months to go. Like this, I mean, this, was a bit scary sell-off, but this entire move up, the only biggest retracement that we got is this 6.9. Rest is all 2.3%. That's the biggest one for this year. So you have to do the math to see where S&P right now, year to date, which is a 15.47. So you're trying to make a case of a 10% drop that put an S&P at 5%. And then you calculate all the other stocks, how much you think they're going to come down. You see? So this rotation that is going here in the Q4 is not really putting pressure on the overall market is that whatever is rotating out, meaning that all the early stocks that made a big, huge move for 3 quarters in a row that are about to cool off in a fourth quarter. That's exactly what's happening right now with Netflix. Because we can go and look here. Where is the this? Um, you see, like a Netflix, like look at the performance. So we're 2 quarters up, down seven. Now we're down at 6.5, 6.51 for Q4, right? You know the rule of those 2 quarters. I told you many, I told you this thing many times. You see how this thing is turning positive after being down for two? So I have a trade open on XLP, so it's working good. It's just that's the bet that you're willing to make only on a data, you know? A new quarter starts, you just buy. I mean, you end up pulling back a little bit more or whatever, but the you're you're willing to make a bet that the third quarter will close positive, you know? And the same thing on the S&P and stuff. 3 weeks down, I mean, there's a 95% chance the price gonna pop. 3 months down, that's call it as a gift. That has only happened, I believe, one time, as far as I remember. So it just could be, yeah. I mean, it depends how. I mean, it's still, I mean, early to say because we still got the 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 quarter. You know, we got plenty of time to go in a quarter. But if the Netflix ends up closing lower for the Q4, yeah, the Q4 that you can, can expect a if you can, can expect a bounce. The quarter should be okay. Yeah, Mag 7 is just the same thing. Yeah, they don't fall straight 3 quarters in a row. Okay, I I pay a lot of attention when it comes to numbers. Okay. And have all the time that I have spent over the years by trading this market. So I watch and I notice and I see a lot of repeating patterns, you know. So I mean, right now is at 6.5 because we just talked about it. NVIDIA is, you see, just sitting in a flat line is because, I mean, it can go three, but I don't know. It's gonna be a little tricky. Gonna be a tough one. Look at Apple, down two. Look at the pop right there, 22.5%. Apple was down first quarter, Apple was down second quarter, but it just because it took such a huge round trip. You know, we just looked at them where the Apple high was and where the low was formed until April, right? So you have a January, February, March. This goes your first quarter, right? And then because it just has to take that much time and that's you talking here 6 months, half the year is gone when you hit the Q2 mark. So that's your Q3, and that's the last quarter right there, you see? So every time when you see especially a Mag 7 or an ETF that has been down for 2 quarters in a row, there is going to be, I would say, like 95% probability that the third quarter is going to be positive. Okay. So, but for that, you're going to have to watch the data. So which we have the screen here, tracks everything. Okay, real done in real time. So we'll know exactly what the performance is. How's it going? So was there see, Netflix has a pretty strong October seasonality that just went in the toilet. Because of the earnings. I mean, there's you cannot earning can just I'm watching several stocks right now from the last week, okay, that I want to buy. But then every time when I look at the stock, then I go to the analyze tab to see, and they have earnings coming up. But the only thing that is kind of holding me back is because I don't want to size up a trade and then suffer the earnings. It's just not a smart bet. I'm willing to wait. I'll trade some random, stocks or whatever. But I mean, I can be right. I'm well aware of that. Fine, I can be in a position for $2,000 to $4,000 and go, and I know that earning is coming tomorrow, and I'm willing to risk it all. I mean, you're taking a 50-50 shot with the coin toss. I mean, me personally, I'm just not comfortable trading like that. I don't take $2,000 to $4,000 worth of risk on earnings. I can if I wanted to, but I just don't want to. That's just my decision. So if I want to play earnings, just say like, okay, fine. If I'm gonna be right, I'll make a couple bucks. If I'm gonna lose, okay, I'll lose 300-400 bucks. I'm fine with that. But I'm not gonna risk thousands of dollars just to gamble earnings, and I don't even know which way the thing is gonna go. It can be all promising by the time the stock opens higher, and then by the time that the stock opens, it just goes right back flat after a couple hours, or whatever the case is. So it's just earning. That's why I hate earning season. It limits your trading so much, is because you just have every position that you open that you know that you're gonna have earning risk. And the position that you're trying, I mean, whichever stock that you're trying to buy, it's not gonna move too much anyways, right? Because I mean, it's gonna make the movement based on overall market or whatever the case is, but it just has to kind of getting close and close to the time when they're gonna have to report earnings, because at the same time, the implied volatility is gonna spike up in the option market. So that has to get fully priced in as well. Closer and closer is gonna get to the date of release of earnings. There's always it's too much into this, and then the same time you have a position open, and one of the big names is gonna take a hit, it's just gonna drag everything down. That's another, or I mean, it could go other way around as well. So it goes either way. It's very tricky, because you trading the stock, the position that you have open. So I'm pretty sure that is sitting in a, in it depends which sector that you're trading. So it belonged to a certain sector. So the sector has a leader. If the leader fall, what do you think is going to happen to the rest of them? I mean, they just have to suffer the same drawdown as well. When you have a heavy weight stock is going to roll over, what's the first thing is going to happen? Stock only taking a beating. And the second thing is the sector is going to roll down. The sector rolls down is going to punish the rest of the stocks as well. So you see, like you could be right on a signal, you can be right on the direction, but then you just like paying a price is because of somebody else mess. That loss right there on a position is the most painful loss that you could ever take on a trade. It is you getting punished over a big name. Other way around, it can go up as well. So it happens a lot, right? I mean, I remember, I mean, I don't do a lot of earnings. Sometimes I do, sometimes I just don't. What was the stock we did? Eaton, I think, ETN trade that we did. Then when the Oracle got a big, huge pop on earnings, and that's how our position moved as well. That was one of the power plant, how, stock. You see, like you can benefit. I mean, yeah, it paid, and I was like, okay, thank you, I'll take that. But it could tank the other way around as well. So it's always a mixed bag. So don't rush or just too desperate to trade every single day. The price is moving, but I just want to be a part of it because I'm missing out on this move. Not every move has your name on it. Okay, just get the thing out of your head. It's just that's not how you look at trading. Your turn will come. Trust me, it will come. You just have to wait. Wait for the right setup. Take a shot and see how it goes. Don't chase price. The minute price opens, everybody wants charts left and right. Like, let at least a 15-minute candle to at least to close. I wait for actually like a first hourly candle to close, like from 8:30 until 9:30. Just then volume kind of settles down and stuff. It kind of say like, okay, yeah, this is how the stock opens, and this is how the first hourly bar has a high and a low, and that's how it worked, and that's how it formed. But market opens, you have a much wider spreads on every stock because that's where the volume comes in, and where you just want to throw positions at the second the market opens. That's just not my style. I don't trade like this. That's just it's too desperate trading. I mean, wo- see, the thing is like it takes days and weeks to find the right setup, and it takes like less than 5 seconds for me to put a trade on. You know, so I just most of the time I just watch rotations and like these ones right there. Let me see. Watch this on this. I was looking at now these ones because I run. I went to this. I'll watch this. Now these are the fresh scan right there. So these are the ones that are the ones there. So we can go like this. So you can't jump on everything, right? So now this is the fresh scan, which was from yesterday because today the market is closed. So this was a scan of yesterday. See, yesterday there's few more names just popped in. Palantir popped in, APP, this app Lovin came, this one came right there. So I'm running this scan on a 500 stocks of the entire 500 index. Okay. So all like this is how many of those? 28 out of 500. Think about it for a second. So the rest of 472 stocks that they're all here somewhere. But you're not gonna see it because I filtered them. They're all here. Some of them are here, sitting down here, all the way down. So you don't know that. You can't look at the entire galaxy of those stocks, which one is where. We're looking for the ones that are gonna make those early moves. So these ones are the ones that are, so Monday we're gonna run a scan. So we don't know which ones are sitting already here, but hasn't formed that hook yet, what I'm looking for. This is a very tricky, very advanced thing, but it's gonna You just have to put the right conditions in order to for the market to kind of give you um, a good rotation. You can't just randomly pick something from, oh yeah, I mean, if I wanted to do this, I can just show you an example of, um, let's do, let me show you just a regular 50 rotation. Let's do a small list. That gives 50, 5 minute Gs. So here, there's 50 stocks right there. They call Russell 50 index. Look where everything is. So how can you buy something from like looking at the screen like this? We have no clue which one is going where and like how the rotation is trying to form. You can't just randomly pick. This can cost you a lot of money, just to randomly pick names. Oh, I like Caterpillar, I'm gonna buy that. Well, where Caterpillar is starting to move. So when you look at the chart and stuff and see, like you can kind of see like, okay, in the next coming days, which one is losing momentum. This screen right there comes first, then signal. I don't chase price. I want to know the momentum and I want to find alpha. I want to move. I want to be in a stock, that position that moves. The position that will move is the one that's going to give us the alpha. And we want the momentum. We don't want to be in some sort of a deadbeat stock that is going to just linger, kind of go, it's stuck sideways because it's sitting too close to the benchmark. I mean, stock can move, but it's just not going to give you you know, um, um, a good move to the upside. I randomly just like looking at these screens here, we can throw 100 here. You can put it depends how you want to run your searches. So all the 472 stocks, they're all back here. So when you run a scan, because it updates in real time. When market opens, it doesn't move that much, but it it's moving. They're like swimming, So it updates and then I will run another scan the next day to see what else comes in. So the list is gonna go, and then when these ones gets out of it, right? So then the other ones are coming behind it. So don't ever expect that we're not gonna find trades or we're not trading enough for this. I mean, I'm running scans on 500 stocks. You think I'm not gonna be able to pick like two, three stocks from here and trade from here? But I just want to buy something. Well, I have no idea where the stock is at. Well, I like the lower price. I know that the direction of the swing is down, but I just want to buy it. I want to go long term. Why can't you just wait for a further confirmation first to actually say like, okay, yeah, it is the time now to buy. Rotation is going to help you. Signal is going to help you. But no, I mean, price are dipping. Yeah, I'm just going to buy. I'm going to throw my money on the board and see if I'm going to get lucky. Because I think I picked up, I figured out where the bottom is. Now in this rotation here, okay, filter this thing down. So now even the fact that the rotations looks like that is going to improve, okay, in the next coming days, but the stocks that you're looking for here, the swing direction is still down, right? So that doesn't mean like, okay, can you just start buying here, like this stock? So like, okay, I'm gonna throw 1,000 here, 1,500 on this one, and then I'll just the rotation looks promising, but at the same time, this direction of the swing is down. Does that makes a good bet? So the oxy is right there. Oxy is right here, right? The swing is down. But this rotation right there will take several more days if it goes like this, which you don't know that. Neither do I. If the swing turns down, and if the stock gets hit for another earnings surprise or some news or something, this thing rotation goes back this way. So this can turn. Instead of going like this, that's what you're hoping for. If this can go like this. So if this turns direction like this, then the next day that I'm going to run a scan, this is going to be out. It's not going to show anymore because it changed the direction on the hook that we're looking for. You're not going to understand this because it has those ratios and momentum. There's conditions that I put them in there. Okay, that is giving me this hook that I'm looking for. So I'm gonna run this. This was yesterday's scan, and then on Monday I'm gonna run another one once the market opens and settles down. Like yesterday, this was app right there. You got a convergence right there. There's your momentum line right there, the green one, right there. Okay, so we know where the rotation is. Now this one has a swing is to the upside, right? Because we have 3 higher bars off this low. So we have a swing high here, 616. Yesterday high was this. So we don't know how the stock is going to open now. The little line right there just turned green. This is the low. You don't need to worry about anything else now. If you just, all you have to worry about is this swing right there. So if this low is right here, you draw your fibs from here to here. You're just only going to trade this price action. You don't care about anything else anymore. Your low is 547, your high is 627. So any retracement here, okay, is where you can buy right there. 608, 596, 587. Well, you don't know how much the price will back off, but this is where you could buy against this low to play the upside. That's how I trade. Confirm that direction, confirm the rotation, confirm the buy signal. So now the direction is up, only going to look up against this low. So we know that in the next coming days, could take another week, could be another 2 weeks, that the rotation is improving. I mean, it's not there yet, but he's heading that way. He's already came all the way from here. So now he's going to make his way toward to the upside. Look how big, huge turn it took. It's taken. So there's because it's a big stock, so there's plenty of alpha here because look how far it is sitting away from the benchmark. And then from here, I just want to close that one. Is this where you have the retracement against the 3-bar swing? And then you look for wherever it finds support, And if it breaks right back to the upside, that's when you run your upside projection. That's trading, you know? I want to buy something here. If I want like I thought about it yesterday and I was like none of these stocks have to report earnings, you know? You got Palantir here. This one showed up yesterday. It's pretty close here. It's gonna be little is because the chart is very choppy right now. I was looking at it yesterday. It's getting close, hasn't formed a divergence. I look for this divergence. This is kind of gives you a pretty nice hint, when this divergence happens from the low. So, like, if you look at this, look at this price actions in September. It's just completely sideways for almost 2 months now. So that's the high right there for this stock. What the stock is doing, that's crazy. Look at this. Oh my God. 6, 8, 9, 9, 9. It's most likely it's gonna break back to the 190, 195 next. It's just very thick layer of liquidity zone. I'm gonna do this. Look at all these highs here. Just keep backing off, keep backing. He's gonna go for one more push to the upside. Even now that we see that it was weakening, but hasn't really weakened much, as you know, that it came back down in the weakening quadrant, but you saw the price how it just literally is sideways. So it's a very coil chart right now. So it's a very like a compression on the price right there. So if this thing improves, yeah, that's where the breakout will happen. And if this thing rejects, it can turn this way. So in the end, okay, it's the game of what? Probabilities. There's never, ever going to be such a thing in trading is going to be a pure perfection. It doesn't matter what you can make. You you try to build something, and if it has a good proven track record based on all the back testing that you have done, then you have a system you can rely on and say like, okay, hey, you know what, this is the road I'm gonna be on, and that's it. I don't really care what else comes along my way, but I'm just gonna stay in this path. You know, it's more detailed trading or investing is just compared to what I see. I'm pretty sure that you guys see it as well. There's a lot of random, like one-dimensional charts that you will see because most people they just look at either up or down direction. That's it. Direction matters, it's the most important thing. That's why we have up and down. That is the direction. But people who don't have that, who don't understand this, well, you don't get that concept. You just have a different way of looking at price. Then you use in different tools, your RSIs and your moving averages and your VWAPs and all the other indicator, 10,000 other indicators. So there's a lot of stuff there just to analyze a one damn single blank chart. So what do you want to throw there? You know, you want to do the Elliott approach, or you want to do a Gartley, or you want to do wake off, whatever that pattern is. You want to do Gann swings, and you want to do those crab butterflies and stuff. There's so many different ways that that you could trade, but in the end, direction only goes two ways, up or down. That's where you put your bet on, you know? Mm. Being more technical, I mean, yes, it kind of gives you the edge, but more and more that you're gonna dive and dig into it, more time is gonna take. But in the end, everybody tells you the same thing. Your technical should be simple and easy to understand. You don't want to make too complicated, and way too much information is never too good either. Keep the chart clean, to the point, you know, and work your way down and up, especially with fibs. That's it, because that's just all based on price, you know. So your fibs definitely is going to come handy for you. Where to find support, where to look for extensions. If the price does break out, what will be the expected move? Then you look at the ATRs, you look at the standard deviation move. What will be the expected move? When the expected move can extend, can just reach that extended expected move, and that's it. If you catch a one standard deviation move on a regular trade, it's a beautiful trade. Move on, find another one. In the end, nobody has ever go broke taking profits. But some, they just exit and then they realize, oh, I wish I would have held it longer. I would have made a lot more. It's every trader goes through that stage. I sold it too early. Like, dang it, why did I do that? Like, where the price is going. What makes you think that where the price is going? I don't know. S&P is going to 6,900 or 6,950 or 7,000 or 9,000. Who knows that? Name me one person in the world who knows. And if you do know, how do you know? You just throwing out there. I mean, I'm not, again, I respect every one of traders, every single one of you out there. I understand that everybody's trying. Everybody has one purpose, is to make money, to be successful. And that's what I wanted to see as well, that everybody should be successful, should have consistency in trading, you know, speed bumps here, there. Yes, they're gonna come along the way, but we're not like being in a losing drag situation. That worst. Imagine going through 2 weeks of trading and nothing seems to work. Imagine that. Like every kind of trade that you touch, it just turns into a shit show. There are traders that go through that. They're going through that stage right now. Either some of them, they went through that stage. That like anything that you're willing to trade, it kind of moves and it just goes against you. Then you're thinking like, oh, you know what? Market just this is just a fraud. It cannot be right. But you're doing everything right. You're following the same plan. You know, it happens. We don't have that. I never put anybody here in a huge losing drag. When did you see it? That any trade that we're putting out there, like all red. Anything they're willing to trade, they're all turning red. I mean, I don't think so. First, I trade very selective pairs. The second is that I make sure that, okay, if I'm trading three, if I'm gonna be wrong, I can be wrong on one, but I don't think I'm gonna be wrong on all three in one shot. So just running positions, so many of them, and a lot of them are positive, and then you have few of them are already down. They're eating those profits. So it's just, I'm not a policeman, and I'm not gonna, tell you how to manage your own money. I mean, everybody's adult. They fully understand what the risk they're taking. You want to play hard? Well, then don't cry when you're gonna take it on the chin. So, like every day, oh, I lost millions. I'm done with the trading. I've got burned. Like I have no money now. You see all those posts that you see on the Twitter? You know, I took my life saving and I put it here and like this kind of a nonsense. If you don't know how to manage money, get help, get professional help. There's plenty of places out there that they will professionally manage your money. That's what most people do it. And there's nothing wrong with that. I wouldn't blame them. People who are invested in the market through brokerage firms, they're professional people. You know, JP Morgan, Chase, and all this private banking and stuff. Like they have their own trading floors. They have their own risk departments. Like, they're managing trillions of dollars worth of people's money every single day. It just, I mean, those people, they have their money sitting in their accounts and stuff. They're invested. They've been managed by these firms. They pay based on what the performance of the market is. And what do you think everybody's doing? Trying to beat the S&P. Everybody now is trying to see like, okay, is my portfolio is up over 15%? Because you're trying to outperform the S&P year-to-date return by doing all the trading and the risk that you're willing to take all year long. So if your trading is below 15%, well, you need to improve because you have a main index, which everything is being calculated by that is at 15%. So your account should have grown by 15% year to date. You need to outperform the S&P every single year in trading or investing to be successful. If you don't want to go through a trading, if you don't want to invest in companies and stuff, you simply buy the index. Say like, okay, you know what? I'm willing to accept what the market gives me. Just throw money there. Let the market do all the work for you every single year. You don't have to do anything. Just sit back. If you want to be engaged in the market, thinking like, well, you have to have one goal is to beat the S&P year to date. If you have $100,000 account, 15% is roughly $15,000, right? So if you put $100,000 in this SPY, right, for the year, you should have made almost 15 plus the dividend. So call like 16, 17,000, 16,000, $17,000. So if you have a $100,000 trading account, your account should be up over 16, $17,000 right now year to date. That's how you outperform the benchmark. It's not about the dollar sign. It's all about the percentage. You have them. You know exactly where you start the year. You know exactly how much money you have in your account, and you know how much you up right now year to date. So it's not a rocket science to calculate. You know exactly what is my threshold is to see what if I wanted to see if I can grow my account 20% this year, 25% this year. So you have those the percentage is going to give you the exact dollar figure. If you have $100,000 account, if you can outgrow your account $25,000, that's 25%. That's 25%. That's double the return that the S&P is willing to pay you for the whole year. Think about it. But nobody's happy taking $25,000 and $100,000. That's the problem. That is the biggest problem because this is that mental game that everybody's so desperate and greedy about, thinking like, oh, I can double my account in 6 months. Based on what? You're gonna double your account in 6 months. So 100,000 will turn into a $200,000 in 6 months by taking high risk, by taking trades after trades, by taking have you and you have no knowledge about option market and you don't know nothing about the stock market overall. What skills and what experience do you have? Tell me. I like to see it. What experience do you have? Like what skills do you have? Something unique that this is the system that I have that has the amazing, results over the years. Do you have a system that you built, that you back tested it for several years, that has a proven track record that can give you that consistency that you're looking for? But here I started 2, 3 years ago. All I know how to buy a call, how to buy a put. That's it. Any other order is gonna come, I'm just gonna get a panic attack. You don't even know how the option market works. But my 100 will turn into another 100 in 6 months. I'm the happy man on earth. Yeah, expectations are very, very high. I couldn't turn double my account in 6 months. You think you're gonna be able to do it? How much stuff that I know? It's just, yeah. If I take aggressive bets, yeah, I can do it. I did 86 last year. You guys all know that. All year previous last year, okay, we were trading. I was every um $86,000. I have a perfect example. My wife, she's at home. You can ask her. I did the wire transfer back in her account. So 100,000 I grew to 86 last year. It was a good run. A lot of good trades for the whole year. But it just, yeah, there's gonna be some year that you're gonna pull really, really good. This is where you boost your account. So you need like couple good years, you know. But that's by trading with the plan, trading with the right size of trades. Aggressive trading, it's not gonna take you too far. Mark my word. I've done it. I've tried everything in this market. Trust me, I've tried everything in this market. From Forex market for 8 years into a stock market. I used to run 10 plus positions, all options in one shot. I tried that. I tried to carry only 2 positions. I tried to only carry 5 positions. I just wanted to see, kind of test them out all different phases to see how it works. I've done day trading as well for a while. You know, I've done everything. I know every option strategy in the option market. I know exactly which one, how it works. Ratio, back ratios, iron condor, like you name it, diagonals, butterflies, broken wind butterflies, spreads, like you just name it. I've done every single one of them over the years. I study those first to see how exactly the option price works based on this strategy, which strategy to put, which, where and how all that kind of the call credit spreads and this, and you go on a margin, I mean, I don't, I'm not a very big fan of margin trading. That's one thing. And second thing is this, that I'm not a very big fan of adding risk to a position. Just, I'm always, I just, it's not like I ever got burned or ever blown up my account. I've never done it. Okay. It's never, I don't think ever going to happen. I'm never going to even let that happen, that I will ever blow up my account. I just, um, I'm just like, these are the two rules that I'm just never try to break. First is to take aggressive margin trading, make bets on margin trading. And the second is like adding risk. more because you're thinking like I can just average my entry perfectly to the downside because I have plenty of time. That's just dangerous. Every time you do it, it's gonna end up biting you even more harder in the end. I'd rather just pay for the trade. I know exactly what my calculated risk is. I know exactly what I'm willing to lose. I'm totally fine with that. I lose a $500-600, not a big deal. You know. So it's just yeah, I like this is why all you always notice me that I always do debit trades. Anytime you do credit, it's I mean, you can make a bullish bull, a call or a put credit spread, or depends how you want to structure the trade. But it's just, I mean, one big slide in either direction, you down thousands of dollars because you took such a huge margin to receive a credit. They're just, you like to do a call credit spread, let's say on Netflix, right? On Netflix, because the premium is so damn expensive, the stock is almost $1,000 or $1,100 stock. Now you're risking almost like you like on a margin, right? So you're putting out almost $20,000 to $25,000 worth of a margin, right, to receive a credit of 400 or 500 bucks. Think about it for a second. So what is a benefit for that trade? You don't you because you cap the upside, right? You don't want to see the price to go above the strike price because you theta positive, right? And it's all about the passage of time. Each day goes by, you collecting theta. And by the time when it gets to the expiration, yeah, you just close it. But you're risking almost 25 grand. God knows anything can happen. The stock rebounds. Imagine looking at your account there now. We're down like 16, 17 grand over a lousy $400, $500 credit that you're willing to receive. It's dangerous stuff, man. The margin trading is dangerous, especially with the options. Pay the damn debit. Take a directional bet. If you want to be a theta positive, there are many strategies you can do to even pay for a debit to be theta positive per day. Diagonals, a perfect example. Butterfly is a perfect example. Yeah, I mean, direction, you can be wrong on the direction, but at least you're just not going to get killed instantly just by buying, either doing a margin trading. Margin trading is good if it goes your way. If it gonna get you flushed out, you toast, you done. You took a much bigger risk to 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 make what is a percentage return? You margin yourself 25,000 to make 500 bucks. It's just I don't know how to do I don't do that, to be honest. That's why most people do covered calls because you know the covered calls. Buy 100 and sell the call. That's it, cap the upside. But you receive the credit up front. Now you have 100 shares, you cap the upside, you sold the call. Now you're waiting for the time to go by and because you want to collect the premium. That's what the covered call is. So most people name him as like, yeah, as a poor man strategy but the only thing is if the stock pops, well, you screwed because you give up all the upside. you know? So because you're long 100 shares, a stock can pop 10, 15 points. Well, you already sold the call up on the top. Well, you're it's just because you capped the upside. So that way that you're gonna hit the covered call because you would have made a lot more money if the stock popped that much. But you put a cap on it because you just wanted to collect the premium. That's what the covered call is. So anyways, so what the rotation is, that's why it comes in along. Um, Overall picture, daily chart as of yesterday, all directions are up. There's a new pivot form here on these on this yesterday. I haven't seen the green high pivot formed here on the Qs yet, so it might come. So you just have to wait. I think it's this. If I have them here. Yeah, right there. So this was formed yesterday, high and low pivot on the SPY and this. Hasn't formed here yet on Russell and IWM. So we still have the lower one at 237. Okay. And nothing formed here. I don't know if this is if this. Yeah, this one has it as well. There you go. So they all do. That's all formed. Yeah. So this one isn't formed yet. Okay. So the bottom line is this. Okay. Going forward for the next days, weeks, whatever the case is. Okay. Your bottom line is this sell off right there, this low. 652, which is 65.50 on the S&P cash. Qs 589, 457 on this one, which has broken. You see how it reverses back up. And this one right there, which is 237. As long as the price is trading above, the market is bullish. If the price will eventually breaks a lower pivot, this we saw it on Netflix and I showed you the other ones, and that's when the price will, you will make the case for a fourth wave. So I'm not really chasing the wave count. So don't expect me to update wave count this time. I don't need that. Okay. I can see the price here, so you can't. So does you. So we don't have to jump on those wave counts and keep changing those. If I need to look at the upside, I know how to run the upside. It doesn't have to be on the wave count. It's too much upside from here. If the market will eventually correct lower at some point, then we'll have a much better read in the wave count. It's just it is a full straight melt up. You know, I mean, on a time frame right there, we're looking at 28 straight weeks, 40.8%. Okay. So 40.8% move that we have since April low, we only had two lower bars. Only two. And look at the size of those. 1.65% range, and this one was 2.13% range. Every single bar, okay, is higher, either outside bar, inside, or higher bar, except for these two. This is how strong this trend is. It's not a joke. And we're just trailing this ribbon right there, as you can see, since this crossover right here. This will take weeks to give some sort of a clue. But at the same time, what I'm waiting and watching is this to trigger. When this will trigger, I mean, and we have a pretty good chance that next week is going to be a fun week. Until then, I didn't. I was waiting for the close yesterday, but didn't appear. So like, okay, well, it's not there. So we just wait. It hasn't triggered yet. I mean, the last Uh, didn't get triggered here either. It's way down here. So we can make a case for some sort of a breathing room to make a bet when something pops like this. We just don't have it. So there's one shakeout week like this. Like we like we talked about this. Outside bar, inside bar with the higher bar. Outside, inside with the higher. Outside, inside with the higher. Now we were tracking these. Now we have 3 for 3. 1, 2, 3. So what happened after that? This appeared after, oh no, yes, from here. So the next week, expected week was higher, then got a bit of a shakeout. So we're just gonna watch this because there's a very strong correlation going here. So this one right there, oops, starting from here, we had a lower week by 2%, but then we had a pop right back up. Okay. Now this one right there, that's where we closed the week. So we're gonna go back. This was a higher bar after this. This was a lower bar after this. Okay, so we're gonna watch next week and see what happens. But this is two different bars. It's not the further. This was the further continuation with another higher high, right? This was not, right? So we're gonna see what happens here next week. What kind of bar we forms? Either gonna be a higher bar or we take a full reversal to the downside toward this low. Okay. So what are we gonna do now? I will close pretty strong. So we can just mark this high. We can mark this week, this week. That's the range right there. So we have 66.55. 66.50 is the pivot. Low, remember? And 68.07 is the high. And we have a lot of action going on next week, next month, sorry, next week. Okay. So we have um where we have I did post this yesterday. So we have okay, that's gonna be the open. And next PI is okay. I don't know about the other ones. Whatever Candace. There's a healthcare stock. That's the one to watch. That's the big name for the big name for the healthcare, right? Right. All right. Then we have UPS, which might take a breather on this earning. I have a feeling. DR Horton here. Then oh, got a booking.com. It came pretty early this year, this season. This is already done. This. Man, have you noticed Verizon, AT&T, and T-Mobile stocks, how they're taking a hit lately? That's the big one. Industrial right there, Boeing plus a Dow 30 stock. Yeah, Caterpillar, that's some action here, man, next week. Plus the Fed. Here we go. That's the real show right there. This and this. These 2 days. I'm so glad it's gonna get out of the way fast and quick. Don't spread them out too much. That's after this, because Netflix and Tesla is already done. And the last one is gonna be Nvidia. That's it. But they're coming up pretty quick. Service now. This is companies of fraud. Chipotle here. Here, Mercado. There's Mercado Libre and that Millie right there. Starbucks here. Man, there's some heavy action next week. Wow. Western Digital, that's a big company as well. Every year. Exxon Mobil, XLE stock, Chevron. These two are the top leaders of XLE. Lindy, that's the massive company for material. It's Lindy right there. Huge material. It's expensive stock. It's like a $450 stock. Some Roblox is here. Comcast is okay. Mark is here. You go. This is Eli Lilly. Huh. Number one most weighted stock in the healthcare. There's some Colgate is here right there. These are big companies. Etsy is okay. CNC is here. Caterpillar is a big one for sure. This is huge. I don't know about this. Like Bloom Energy booking. We'll see. Visa. Electronic art already got bought out. Wayfair. I don't know. This might be some all about tariff news to see. CDNS. That's a big. That's a decent. I don't think I ever traded this stock. Yeah, there's some action here for sure. So we might expect some whipsaws. The most important one is this, especially this sucker right there. This is gonna move every cloud stock, software company. Is just this. This is a giant. So there's some. There's definitely some action next week. So buckle up. Minerals. There's a lot of them are starting to look at that. Look at that. All down now. All time to take a breather. Right into earnings. This rotation is that'll be something. Downswing with the rotation like this for all these material stocks. It'll be fun to watch. Some of them just went crazy. Look at these things, man. 450% is ESM. 353 votes MP. I don't even know these. I mean, I know about Freeport, but the rest of them, Newmont, I think insurance, the earnings are coming as well for the gold. Swing is down. This one is down for 4 days in a row now. Lamb Gold Corp, $11 stock. This one is down for 4 days as well. The higher flyer stock even look like, oh, pulling back from the top. It's a $4 stock, so no wonder why it's showing this much. You're not, you're not gonna get this much on a $30, $40 stock for a year. It's just near impossible. Yeah, it's pulling back for sure. Dude, oop, right move here. Forward to this is 67, 24 days. That's 7 days so far. 27 down for 4 days in a row. So go down here, just 4.57. Yeah, just pulling right back to this pivot high right there, the swing high. This is the, I have no idea what this company, this zone right there. This better hold. This 457, 475. From here, it could give a bit of a bounce. You don't want to break that 78.6 of the previous swing, high and low. It'll open more downside. Right. ESM, where the heck is this stock here? ESM, gotta be back there. Where is that? Right there. Silver and gold mines. Yeah, it's coming down. This is a weak one. So there's these three are the worst one right now. You know these rotations are gonna improve. Keep that thing in mind. It's just a matter of waiting.
Oh, what's hiding at the very bottom?
PLG, that's the worst one. Taking a massive. Ooh, look at that. It's taking the biggest turn. Yeah, you gotta watch this one. This right there. This high. This high. Oops. And this high. That's the zone. You gotta watch. I mean, you don't want to slide too much out of there. It's gonna do. I usually follow 20, but you see it's down here, way down here. This area should hold. So this is already gone. So mark this. That's the area to watch. Okay. This is going to be a rejection. The resistance we already got rejected here. You see, it came up to this, backed off. So you just the previous swing is always going to have a become a this is weak. Almost down to 90 now, anyway. So gotta because it's just pushing way down. So very cheap stock. Yeah, I gotta watch this to see what the. Oh, yeah, there you go. So it's fighting the 50 right now. That's just good. See, last 4 days, It's fighting that 50 because it has such a huge upside. At 200 is going to be way down right there. Not that far, but $1.73. So that's what I'm saying. This zone right that this is a key zone. Yeah, you don't want to start cracking 50. You're gonna start pressing toward this 200. That's what the Netflix is doing right now. So you just went to 50, crack below, now below 200. So this is the area it has to fight. So the swing is down. Rotation looks horrible. So in the next coming days, like in the next 3, 4, 5 days, next week or so, if it managed to kind of like fight this 50, then it has a, and if the rotation improves, and it could work his work his way up. The key line is the line in the sand, $1.36, right there. That's low. So that's the window right there for the price to find support somewhere between these moving averages and to stay above this high, this low. So yeah, materials are way too many down. Nuclear, yeah, they're all pulling back as well. Yeah, the local this company's a joke. Look at all the other ones. And this one got pushed here, so a lot of their swings is all down except for these three: GEV, ETN, Duke, and this. That's the one we traded. That's the one I was talking about with Oracle earnings. Remember I had a trade open? Oracle got a big pop, so does this stock. So this Oklo, 540%. Jeez. I don't, I mean, I understand that I didn't trade these ones, so let's see. Okay, it's filling below anyway, so we can do, oops, doesn't, it's gonna form a new pivot here. That's why it's pulling back. We could do the low. Yeah, the new one is gonna get formed here pretty soon. Swing is down. There you go. Yeah, we don't have to go that far. Let's see. Stock is, the rotation is rotating out. Okay. We have a support at 108.54. The low is 114. This is going to be the resistance here to the upside. We have a support here, and that's the low we just recently put it on. So that doesn't mark. You got to mark this too. So this is the window that we're in. So I can throw 50 here. That's exactly where the bounce was. And then we have 200, which is way down here. So we're gonna, it's gonna, if it comes down here, I mean, that's $69. That's just gonna cut the stock in half, less than half. So this is the area right there that you can watch. Okay, I mean, stock is down almost 41% off the highs. Well, it's up over 500% as well. So the swing is down. It does manage to put an inside bar and a higher bar yesterday, so it's probably looking for one more bar to turn the swing back up. Chances are pretty low because the rotation doesn't look that good. But it took this chance. We'll see. I mean, it could be a due for some sort of a potential bounce here. So the support 108, 114, which was 2 days ago, which was Wednesday low, right? So you can highlight this low to this, you can just make this as a shelf here. So you watch this one against this resistance for now. We could do a VWAP of this high that puts at 150. It's at 136. So if this gonna be an any potential bounce from here, okay, so we had a weave up at a 150. So you can just look for that 150 price for an expected bounce, right? As a resistance. So you had a 144, which is this. So you're, I don't know if you wanted to trade, should take a 145, 150. Okay, that's the upper shelf that you can make. So you can just turn this one green. So an expected bounce. So you had 135, 145, 150, or 140, 150. So just to have a little bit more room, on a spread. Instead of making a $5 white spread, you can make a $10 white spread. So from 140 to 150, if you are planning to play some sort of a bounce, you can. So that's the yeah, rotation is not really helping, but you're just trying to scale a small counter trend, small move if you wanted to play something. So you can consider it if you want to. If not, just let it work. Just let it go. Wait for the further better confirmation before you buy it. But the thing is this, you can get confirmation here, but then you miss out quite a bit of move from the low. But that's the challenge. That's the decision that we all have to make. If you don't know what the low is, first of all, nobody know what the low is, right? But keep one thing in mind though, okay? A 3 bar swing, okay? Again, swing that I'm talking about, that it lags, okay? It lags. Why is that? Because by the time the swing turns back up, you miss out a lot of price action when it actually flipped the swing. Okay, so your entry based off a 3 bar swing is always going to be a little late. Okay, if you're looking for a faster entry, you have to go to a 2 bar swing. That will give you a faster entry on trades. This stock pretty much look the same on two and because it's just pulling back. That's why. But the 2 bar, I can put a 2 and 3. You can see side by side. You see, so I can make this one a little more thicker. Oops, on this line. So now the thicker line, the thick line right there is the 3. This is the 2. Make it a little more skinny. So now you see like how fast and quick the 2 turns compared to 3. You see, 2 only took this, but not the 3. 3 just moved on. For trend confirmation, for a much better um, um, to look at a price on a bigger time scale, to have a much better read on a price, to actually ride the trade along with the trend, a 3 bar is the way to go. If you want faster entries and faster exits, 2 bar swing is the way to go. Okay, so the trader who understand the concept of a 2 and 3, okay, so you have to choose which one works for you with your risk profile. You want faster trades, you want faster exits, you apply the 2 bar. But the 2 bar will reverse on you much faster than the 3 bar. Okay. So keep that thing in mind. So there's always going to be an upside and downside. So you're looking for a quick, fast action. Two is the way to go. If you're looking for a steady run, which is ideal for swing traders, for stocks that you're willing to ride up, if you want to buy shares, you focus more on a 3 bar. A 3 bar cuts the noise a lot more than a 2 bar. Okay. So the swing, as soon as the 2 bar will form in either direction, the swing changes direction. Okay. But the three doesn't. You see, like here, now take this low. So the 3 bar, this thicker line, you see that all the way up until here. In the meantime, look where the two went here, two turned down, then went up, turned down again. Then when you see, you have more swings here. So it's not easy to trade. It looks like it all happened here when you actually happens in a real time. When you actually have a trade open, it's not fun because the direction of the swing turning too fast, you know. So this way, a stock breathe better. You can find much better entries, you know, by applying some of the tools on top of it. It just gives you a much clear read on a chart. And that's what you want. You don't want the some roller coaster, rides back and forth. You want a steady run. So there's always a. I don't think there's many people understand swing trading anyway. So first of all, you gotta have to have the software to be able to do it. If you don't have it, then you don't have it. So the only other way you wanted to do it is simply mark the high and lows on your chart. You know where the high swing was, where the low swing was. So that's not a really you don't have to like spend thousands of dollars just to have a chart like this. You say like, hey, I'm looking for this swing chart. Okay, I can copy paste it to you. So what I'm doing here, you can do exactly the same thing on your blank chart. So what is that? So if I don't have this, okay, well, I want to mark my level. Okay, where you can mark. This is the blank chart. So I can just like simply gives you, so like, okay, here it is. Go back to your chart, grab one line, say like, okay, I draw one here, and draw one up on the top. So now these are my levels. So obviously the price is coming back. That is going to be my support because this is what you're looking for, right? On the weakness, where will be the potential support is. Now, if this thing's starting to break, then we come back down to this way. So you just keep because now you're coming down because the direction of the swing is down. So now you're looking down. You're not looking up. That's the thing you need to understand. It's just, I was telling in the at the open when some of you didn't come in. There's one thing that I've learned over the years is this that it's very hard, okay, to fight the down direction to the upside. I've done it many times, but it takes time. It's just difficult to fight. Once the direction is down, and then you say like, well, I want to buy something, but even the fact that the direction is down and the price is down, and then the price get a bit of a pop for the like, for a day or two, and then you say like, well, I would have bought it yesterday because now the price popped, right? Even the fact that the direction is down, but you wanted to buy the trade because you think that you picking up, you're getting a bargain price that I can just enter the trade. That trading mindset right there is just a pure opinions that you just basing on a price that you simply say like, okay, fine, I'll just buy it if I'll see if I get lucky in a day or two to see if I can play the bounce. So if that is that's a tough one, you know. And then you say like, well, I'm hoping that I can just this thing can just reverse back up. I mean, you can do it that way, but it's going to be a very painful, a lot of speed bumps along the way because you're just assuming where the price might put a low in, and that is the low, right? Like the example here, like this is 114. Is this the low? It could be, but we don't know that yet until we get the further confirmation. So if you enter a price here, let's say at 120, right? You say like, okay, I want to buy this stuff. Now you just bought them because price is above the 50. I paid 120. Now the price pushed lower, went down to 114. It could have go down to 110. Well, we don't know that. So it managed to put a load on Wednesday low at 114. Fine, you got yourself in 120. Now you're at 136. So you took a little dip. Now you're positive. So is it a trade that you could close? Is the trade that you think like, well, this is the low, this is it, and now we're just gonna rip right back up to the upside? Well, yeah, we can. Anything can happen. Yeah, this can be a low, or if this thing can bounce and then can turn back down again. We just simply don't know. But this one, at least, if this is the low, and if the swing turns back up, that at least gives you a direction thinking like, okay, well, you know what? Now at least the swing is up. It's red, right? So it's always a tricky part. Like when you enter the trade, that is the most difficult decision that you have to, am I paying the right price for the trade? Because the rotation is weakening. We know the direction of the swing is down, right? It put a potential low 2 days ago, and from 2 days, it got a bit of a 15-point pop to the upside, right? So, if you thinking like, did I miss those 15 points, or do I know that the 114 is going to be the low? Like you see, like these are the things. Like, how do you know? How can you calculate a 15-point move? Well, you don't even know where the exactly low was. Well, you could be entering at 130. You're up 6 points. From 130, you went down all the way down to 114. So you took all that beating, right? And then from there, from 130, you're at 136. You barely like almost break even because all the time that you wasted to the downside. So it's the point is that do you wait for a further confirmation to enter the trade? Or do you simply sit and say like, hey, you know what? Yeah, the price is pulling back and this is what I want to buy. Then people have one thing to, oh, I'm just buying long term. Okay, well, you can buy long term when you have a much better confirmation, don't you think so? That doesn't mean that, well, this is it, that this can never go back down. Anything can happen. Swings are never perfect. I mean, they can reverse on you. Anything can reverse on you. It's a risk, regardless what you trade. But it's just a certain price that is just like people talk about it all the time. Like, hey, I used to own Tesla at 100, but I sold everything at 150. I wish I would have held it. It was now is at 440. Those like that kind of a trader talk. Like it happens to everyone. I remember buying Amazon. I mean, I'm talking about older price now because now the stock is at 22 $204. The old price is technically 2240, $2,240 because the stock split. Yeah, I used to own Amazon at $587 price. I don't know if I can go back. I know that for sure. I bought them at $587 and I sold everything at 750. Think about it. I made money on the trade, but I didn't. I only end up, um, doing that as like a regular trade. Even the fact that I bought plenty of shares that time, but I don't know what I was thinking, where I was on the chart. I dumped all the shares at 750 from 587. And then thing rallied to 1,000 to a 1,500 to a 2,000. I was like, wow. So that's how long I've been trading. I know these stocks, that how cheap they were 10, 15 years ago or so, and where they are now is just, it's crazy how the stock improves over time. Because, months after months and quarters after quarters. And see, the thing is like corrections are part of a healthy trend, and there's nothing wrong with that. But some people look at them, it's like the end of the world. Every trend is gonna reset back somewhere, some point, and some of them are always looking for where the hell is the top? Where is the top? When we gonna get this correction? Because I want to buy something cheaper because I cannot chase and buy this market. That's so expensive. Everything is up, um, is to the upside. But that's why we use filters. We know what is weakening. We know what is turning around. So that kind of it helps. So I mean, it doesn't mean that. So the trades that we got paid on is all based on the trades that how we we took before. So the ones that played out, they followed the same plan from the rotation to the signal to the to a certain target, and the one we have open has the same plan as well. It's just a matter of like how many will fail. So if you have a much higher win rate, so it means you're fine. But you're not gonna have every single trade is gonna be a winning trade. It's not gonna happen. But we're not. The only thing that I always, have a positive mindset when I start my day every single day, just to make sure that whichever horse that I'm gonna put my bet on, or whatever that I'm willing to write, whatever stocks that I am doing, I'm just don't want to go through a drag phase. That drag that we talked about before, man, is painful. That week and 2 weeks of time goes by, and then you looked around and peeps, some guys are posting like, I made this, I made that, and then you sit and losing with your head down, thinking like, what the hell? I'm losing. This guy's making so much money. That hits you really hard. Your account is decreasing in value. It mentally gets you, so over trading, gotta be careful what you trade. Price is moving doesn't mean anything. You can't jump on everything. These stocks right there, which is coming, they're gonna eventually come back here. This sucker right there is gonna be the first one that's gonna turn around eventually. So this is already turning around right there, the VST. See? Not going too deep. It's gonna go deep. It's gonna start cracking that 50-200 day moving average. So because this sector is a pretty strong one, so these pullbacks are not gonna be too steep and deep on these ones. So most likely anything is coming toward the 50 is gonna bounce all these names. So watch that one. The only thing I can say on nuclear has been up. Look at that, man. It's crazy. SMR. And Mag 7 stock are not, there's not a single stock is over 30% right now. The Mag 7. What do we have? Netflix 22, Meta 26. 24, NVIDIA 38 is a poster child right here. Google is the one is Google might kick NVIDIA this year. Google is a beast. Excellent performance. Look at that, 3 quarters going straight in a row. Yeah, next Q1 next year might be take a little pause for the Google to kind of reset for the quarter. It's going three so far. We'll see if the earnings are coming as well. So this is dead money right there on Amazon for sure. Absolutely dead money. It looks okay. Um, just the swing is still down. Just weekly swing is down as well, right here. So I didn't do anything heavy. I only bought 25 shares that I put a trade out at 212.98 is my net cost of 25 shares that cost me almost $5,000. So I have that working. I mean, if it goes, it goes. If it kind of backs off again, fine. But I gotta go. We gotta suffer. We have earnings coming up, so we'll see. So that's the only way. If well, when at fourth quarter, okay, looking at Amazon down in the first quarter, when rallied in a second, okay, so rallied in a second, so that almost break even, right? Gave down 13, up 14, right? So that's almost a flat line. Then the last quarter was a completely flat session. Okay, so just the entire month, all the movement just went for nothing. So now it's trying to make a case here. So there's some noise out there everywhere that Amazon is just not doing anything, right? There's no massive downgrades either, but it's just it's lagging. It's like it's starting to remind the same thing what I had where we're talking about Apple before. Remember? So Apple, a couple months ago, like you remember the AI had a big boom, right? So Microsoft has been running hard, and then you have Nvidia and all the other ones, and then everybody was talking about what Apple is the one left behind, is so behind on the AI. None of their phones have this AI anymore, and this and this, and then Apple just sitting quiet. Apple's doing what is Apple doing on his own. That doesn't care about anything, you know? And the stock has not performed at all and how wild the runs were on some of these stocks, Broadcom and all these, I'm talking about all these chip names and all the Meta and all these stocks had a big, huge run. Apple was the one just when we talked about it, looking at it, like what the heck is going on? Why the hell Apple company is not putting any kind of a remarks, not saying anything? They've just been sitting quiet. Look, when the stock was down for 2 quarters, look how it pops in the third quarter. Now it's starting to show some action. 265. That's a monthly bar. So it's a higher monthly bar. So this is the only the but when you take a dip here, like this kind of a 25% dip, I mean these are big, huge drawdowns for a company of this kind of size because you're losing so much market cap, with this kind of a decline month after month. This is a very tough bet, to be honest. If you're a shareholder, that's one thing. If you're an option, this is not an easy to play a full V shape reversal or a U shape. It just takes time. Look, inside month, you got two of them here. Imagine sitting on the options on these 2 months. If you get yourself somewhere here for 2 months, you sit in flat. 2 months. How much money that we can make in 2 months in several trades. And you're stuck with one position because after this drawdown, look at this one, inward the kind of doji. Then from here it start moving. This is when Apple's starting to move from here. But the size of these candles, look at the ranges, how the ranges expand to the upside. 16.68, 13 point, this double digits instead of all single digits here. 4, 6, 9. So when the stock runs, when the one period rate of change starting to accelerate into a double digit, that's when the stock is going to rip. Well, that's why it covered 22.5% for these two. I have Apple. I'm not going to worry about it. Never sold it. I've taken huge up and down swing. Oh, keep collecting dividends. It's good dividends at Microsoft. Poster child, something to watch. Seasonality look okay. We'll go stretching into it last week. I mean, maybe started the quarter. I mean, technically up 1.2%. Look at this. So higher monthly bars. Every single one of them since April low. This low right there with this kind of a size of a wick, every technician will tell you that the low is in with good experience. This kind of a massive wick, because if you look at the 2022 low was only this wick, but you have a huge body though. Not something like this. Yeah, this is that range of this mass crazy 15.10. We haven't had any 15s until back by the COVID pair. 15.84 was back in February of 2020. It's a huge one. That's the COVID happened. That's a recession. This gray area right there is just the recession tool that I have it figured plotted in the back of the chart. So whenever we're gonna have the recession will trigger that area, the chart is gonna turn gray. So it has that. So not even close to it. So I know a lot of people say recession is coming, recession. Okay, whatever. When it's gonna come, it's gonna turn like this. So whenever the recession trigger, there's one here, turn gray. Will confirm the data will confirm the rotation. Sorry, the recession. My rotation is like I'm always looking at my head is like the stocks are moving, so does my head is like I'm like in that circle as well. The way I'm chasing stocks. It's crazy how this thing works. Yeah. Let's see what do we have just want to look through some of these earning names. Again, nothing is anything can flip, but at least kind of gives you a bit of a hint to see what are we looking at. So what do we have? NX, this is gonna be a Monday after the close. NXPI. There's a buy signal here on this one. Very choppy swings. NXPI, the 219 semiconductor name. What else we have? Sophie. I don't think this might. This is a pretty coiled chart. This might get a pop to the upside. There's a mean reversion buy signal triggered here on October 7th on my birthday. It's just yeah, this is pretty coiled. So this one UNH has a sell signal here. It doesn't look like a very strong one. This is a sandwich trade right here between 50 and 200. It's just been sideways for since last month. So being attractive here. PayPal took a dip, got a trigger a buy here. Just fighting a resistance here at 200 now. That's going to be the wall right there, 50 and 200. Yesterday, hugged the 50, 200, backed off. So yeah, you need a strong push. I'm gonna break on the first attempt. UPS has a bit of it might recover. As this buy, just it's a tough one because this low is, yeah, 200 is all the way here. That's 50. It's fighting 4 days just to clear the 50 first before, they need some strong earnings to make a case. DHI, yeah, there's some action here. And consider this. Again, I'm not suggesting you that you gotta gamble everything, but we're just watching some lottos if you wanted to consider. Let's look at the big name. I don't know these ones. Big movies. Geez, what I said. BA has a one. I know that. Looked at it yesterday. So Boeing has one. So Boeing is a potential. Caterpillar is pulling back now. It has such a huge run. It's not going to be that much of a weakness. Just stock is up 44% year to date. What do we have? Let's see. Some pretty bullish stock, trading well above 50 and 200. Not bad. Next upside is 82. So let's see. See, it's a lot of resistance right there. Yeah, that's this the breakout point right there, 75. 75 target 82. Let's see, what do we have? CVS, I don't care. This Meta, we already looked at it. Microsoft is trying to curve. It's just, I mean, the swing turned up. It needs to take out this high right there. So that would, this high, that 526. So looks like some sort of a U. I mean, this is going to be the most important earnings. So it has this initial dip from here to here. So this move right there is just you sitting right between from this high to this low at almost at 50%. Okay. So I don't know how it's not a one direction of like you see like here, look at this price action. It's gonna be a tough one. So you have the first initial decline here. This is almost a 50% retracement. That's exactly what the guy was I was telling you about last week. All he trades is this. you know. So you have a high here and a low. So this is your trend, right? So this moves, okay, off 50% of a point A to point B. So 50% is a, so all you're looking for is a 50% of this. A price can come back here, fine, right? But the point is that you're looking for a trade from a 50 to this 50. That's your trade. This is a risky move from this low. A price from here can go right back up to this, but it is fighting this overall trend. I'm talking about swing. The overall trend is fine, but you're trying to scale a trade between this from this high to this low. Okay, so you have a forced swing down. This is a risky move that you want to avoid. You're waiting for the price to hit a 50% mark. This move right there, you take a 50% of this and you only trading this and you get out. That's it. And now what can happen like this can happen from here to here. Fine. We just don't know. So your trade structure is 50 from here to here and 50 from here to here. This is the whole move that you're looking for. It's a pretty smart way to trade, right? I can script this thing like it gives you the exact kind of level, but I don't, it's not my style. So I don't trade that way. You're looking for a 50 and a 50, and all you're trying to trade is this. You're technically a seller. You're not a buyer. This is a short position. You're shorting at 50 and you're taking profit at so you're basically looking at 50 here for an entry to the downside to target 50 or 38.2. So these are your or 23.6. So these are your three down targets against this move. If the price goes more, well, obviously you go negative because the typical B wave retracement is what? 50%. So you're looking for a first initial move down, right? Which is a 5 waves down or a 3 waves down. Then you look for a 3 wave move up into a B wave, which is near the 50% is 61.8. You short a stock over there and you look for a 50% retracement to the downside. So I can just show you on a simple chart. So we need to find something in a downtrend first. Here, take this example. So you take this high to this low. Well, because of this, that doesn't happen that time, right? So you take this high to this. Oh boy, where is it going that way? So you close. Let me clean up some of these. So what you're looking for is 50 of this. Okay, so you have here to here is 50 is 340. See where the price backed off? And then from here to here, Clean up all this. 50. This is your trade. But this is on a 1 hour, so obviously it's going to be much tighter. You see how the price went here, came back to 50? That's the trade. So you're willing to make all the money in this trade right here. So this drop happened between from this high to this low. This bounce happened to the 50. Then you draw from here to this high, 50. That's your exit. So you're a seller. You're not a buyer buying puts. This is all the trade that is looking for. And then from there, you see how price reverse right back to the highs. That's exactly what he's saying. It's like, that's fine. It can happen. If it's not, then it goes right back down. Because this, just assume this is a trend. The price is basically fighting this trend right there. So that's how that is. I mean, it's not that difficult. I have to sit down and kind of measure swings to write full scripts on them. It's not going to be easy because you're going to have to find the high and low of the right swing. And then you're going to have to figure it out and see where the 50% retracement is going to land. That's not going to be an easy one to, to do. But you can manually do it. That's not a problem. I run swings left and right. I mean, all the time. You can do it that way as well. It doesn't have to be all scripted. That's if you're looking to create some sort of a sell signal on on um, on a certain swing. Yeah, that's different. But I don't know if I really wants to do it, I'll do it. I'm always doing something, so I'm working on a few other things. But if I feel like it, and I can see if I can do a 50-50 here. I have my own like signals that I built right there that gives you the exact price, the when the swing is down and when the swing is up. So yeah, you're not gonna find that like McDonald's here, right? So if the swing is either 298.41, so 298.40, so 290, yeah, just because it calculates the full price, I can round it off to 298 if I want to. So it fires signals that gives you the buy signal when the swing turns up and gives you a put signal when the thing goes down. So I see it here every day. So whichever stock like Palantir, right? So now the swing is up. So that's the signal that fired at 177. So these are different screen. That's just on the weekly side. This is on a daily. So these are my I I watch them, trade them sometimes, depends. So whenever the swing turns a direction, it gives me that signal. If it goes down, I'm gonna get a fresh signal. As soon as the signal turns back up, I'm gonna get a fresh one. So it updates as soon as the direction of the swing will change. So I gave a hard time to this guy writing this. This is a very complicated script because it's very difficult to measure high and lows because you don't know where the low is, and where the high is gonna form because you simply don't know how the session is gonna go and how deep the price is gonna retrace and how much is gonna go up and how the day is gonna end. But I figured it out. So then, yeah, it gives you an entry and a price. These are like 50, 60 delta trades. So you technically like like roughly like 60 delta trades, which I will always like them anyways, because I do mostly spreads. Pick one and then sell something further out. So it's perfect for spreads, you know. The call is definitely going to be much expensive, just a single call, like Meta right now, right? So Meta right now, the trade that we closed, right? I mean, I think we did to look on what trade we did on a strike price. Um, yes, most of my entries are going to be very, very close to this price. So this is what I watch. Uh, seven. Yeah, I did a 737.40 call spread. Yeah, so that I don't know if that's time the swing was down or it was up. It's been up from right now it's 717. So right there's 717. And the price is just trailing above. It needs to stay above this yellow line. So that's where you need to keep the signal alive. Yeah, this one triggered probably yesterday on Eli Lilly. So this might have a potential. That's a pivot right there. 864. Swing is up. So it changes. So yeah, those are different. These are different buys. Some of them I did. I need probably have to remove them. Here got a sell signal here on this. Here, here's another example. What's going on here? Here's another example. Here you have a first swing. Here's this. So now let's draw fibs. So couldn't come a little close to the 50. Came to 38.2. So we can do 38. You see? He's looking for 50 from here, and then you run from here to here and look for the 50s, and that's your trade. What we just talked about. The ranking just turned up third. The swing just turned up. Okay, 11 o'clock. I mean, this next week is all about, it's a pure gambling week, to be honest. That's all I'm going to put it. It's a pure gambling week next week. Throw something. I don't know, might trade something. I'll see if um, volatility is not that crazy. I mean, most of them are all gonna be, they're all gonna pump it up. I know. It's just oh, this U.S. Treasury talks with China concluded for Saturday. Very constructive talk with China expected to resume Sunday morning. Everything is just, you see, that's just part of the deal. I'm gonna 2 hour, 1 hour later, that's okay. 150% tariffs. It's like it's like a video game. I'm gonna stop the recording.